Thank you very much for joining this webinar on iron market outlook 2024. I'm Mindy from the ferrous commodity team of Orient Futures. In the next 30 minutes, we will talk about the research on annual iron supply and demand outlook and some big changes after this Chinese New Year. Let's move on to our first part. In 2023, we saw a 11 million tons deficit of iron market, and the practice index increased from $110 to $145 at the highest, along with the stock decreasing from Q2 to Q3. Although the price had fallen again to $115 in this month. After the pandemic and the logistic disturbance, we saw most suppliers, such as Brazil and India, are recovering their supply in 2023. The global seaborne iron supply increased by 59 million tons in 2023. That means a 5% growth year-on-year. The market deficit in 2023 or came from the higher than expected pig iron production growth. The growth, which we all know that, came from China's large steel export. According to the customs data, in 2023, China's steel export enhanced 24 million tons, which we can transform to a daily 60,000 tons pig iron production incremental. In 2024, not surprisingly, the iron seaborne supply will continue to grow, although with a slower pace. According to major miners' production guidance, the seaborne supply growth number will be around 37 million tons in 2024. The supply incremental came from such as we can see Vale and some second-tier Australian mines, some new mines, and some new mines in Africa. Except the seaborne supply growth, there are still 8 million domestic iron expansion and about 10 million scrap incremental. So we can see the raw material supply in 2024, as we forecast, can meet a peak iron production up to 2.45 million tons per day. That can match a nearly 2% demand increase. However, the market steel demand forecast for 2024 is just nearly 1% before the holiday, and maybe has slipped to negative 1% after the holiday, since we now have seen some signs of the demand slowdown. Now, let's look at the demand forecast by different segments. We can see in this picture, the market consensus for real estate is still very weak in 2024. After dropped nearly 8% in 2023, the real estate part will drop another 5% in 2024. The biggest positive power last year, the steel export, cannot increase even higher. So we forecast the export part dropped a little bit. We will give these more details on this later. The key assumption to make a positive demand growth is a higher infrastructure investment in 2024. However, before the Chinese New Year, the government asked 12 highly leveraged provinces to suspend their infrastructure construction. That make the market begin to wonder how the infrastructure growth will be in 2024. So to make a long-term supply and a demand conclusion. The supply side in 2024 can meet a peak oil production up to 2.45 million tons per day. That can match a nearly 2% demand increase. That means the iron market may turn into a 20 to 30 million tons surplus in 2024, which we think is just a slight one, and the price center may decrease a little bit. Now, let's move on to our second part, the big changes during this new year. Firstly, after the Spring Festival, the most important indicator for all the industrial goods are stock level and the stock slope. We can see on the picture, the accumulation slope of the big five steels is normal as Europe, but the non-big five steel stock slope is extremely high during the holiday, the right one. And some stock pictures of other non-ferrous steels and construction materials looks very similar with the right one. So that means the demand during the holiday is extremely weak, and only a very strong demand recovery can push the price up, which we now believe the property is very low now. In the infrastructure demand, in some northern part of the country, for lack of money, some infrastructure projects stopped earlier before the holiday and expected to restart late after the festival. The manufacturing part is still acceptable now, but it became even more clear that the steel export may face a downturn in 2024. It is very hard to see another direct or indirect steel export growth in 2024, as we are seeing more and more anti-dumping measures and overseas steel capacity restart. We also heard that some Chinese car plants who increase the order before the anti-dumping takes effect have reduced their overdraft order to a normal level in the next March or April. Also, the government may put some more measures to control the steel export too. So at the moment, we can see that we may face a negative steel demand growth in 2024, although now we are not very sure about how deep it will be. Steel mills also very cautious after the holiday. In terms of market players' behavior, the biggest difference between the winter in 2023 with the last 4 years is that the absence of speculative demand. For nearly 2 years of margin shrink, most steel traders are now very cautious to the demand recovery in 2024. So they are not willing to hold too much inventories in this slack season. So most mills had to hold the stocks by themselves, which we think is a huge test to the mill's cash level and maybe even to the balance sheet. Slow recovery in demand, along with too much stocks in hand, mills are not willing to recover their production very quickly. We can see the 247 mills peak iron production remain at the very low level of 2.25 million tons per day during the holiday, which we can see is a very or even the slowest pace during these 5 years. Steel mills are also suffering a slight negative margin now, and all the market players are waiting for the demand recovery in next months. The peak on production will definitely recover in March. We are sure about that, but we are expecting a slower pace and which means the demand of the iron ore will recover very slow. The supply side shows very strong since this January, which together put the pressure on the iron price. As we have just mentioned, the market seaborne supply growth expected to 37 millions in 2024. However, both Brazil and India showed very strong shipment during last 2 months, resulting a cumulative of 15 million incremental supply in just 2 months. If we simply annualize the number by multiply, we may get a nearly 100 million incremental supply in 2024. Although we think this simple multiply method is not an accurate way, this rapid increase in supply has accelerating the market consensus for an iron ore surplus in 2024. On the way of waiting for demand recovery, the steel mills turned to the low stock strategy of raw materials again after the festival. The Chinese port-side iron stock, as we see on the left picture, has increased to 136 million as data released last Friday, and sure to break through 140 million. Also, we heard some mills are reselling the stocks in the dollar market, which caught the Singapore market even weaker than the Dalian market. And the point-to-point import margin turns to positive since this middle January, which is an important market decline indicator. To follow the market trend, we are strongly recommend to pay attention on this intermarket spread. So we can see in the picture, now the point-to-point margin is still positive now, which means there is still a price pressure for the iron ore market. At the last, we will move on to our latest price forecast. For the long term, according to the supply and demand model, the latest cost curve, we believe the Platts index will be on the range of $100 to $130 in 2024, and the iron price will still weak during the short term, but it will be supported at $100. And we are also waiting for the strength of demand recovery next month. That's all for today. Thank you for your time again.